Namaste, crypto aficionados! You're watching Digital Capitalist, and I'm going to bring you a great project today. But before that, I just want to say that I'm not a financial advisor. Please do your own due diligence before buying any cryptocurrency. Cryptocurrencies are risky and you can lose all your money. I also want to say, please like, please share, please subscribe. I want to grow my channel. I want to bring you more better projects. Please like, please comment on the comment box below and tell me what projects I should be looking at, I should be reviewing. I like to review the projects that are not out yet or not many people know about, right? So please do comment below. Okay guys, so let's start. So Centrifuge token is going to be on sale on Coinlist. Okay, Centrifuge token is one of the first protocols to connect DeFi to the real world, as it brings the untapped multi-trillion market of real-world assets on-chain. Businesses are using Centrifuge today to access the liquidity that DeFi offers. Okay, so why are we excited about Centrifuge? The total value locked doubling every month. Centrifuge has entered a new category of total value locked TVL growth, real-world asset RWA TVL. The protocol tokenizes real-world assets by converting them into NFTs on the Centrifuge Chain. Okay, so their TVL is doubling every month. That's a very good sign. Okay, second thing is Centrifuge Chain is built on Polkadot for speed and low fees, while its financing debt, Tinlake, is built to access the massive liquidity on Ethereum. So Centrifuge is the blockchain and Tinlake is the protocol, right, that they're going to be using. The native token CFG is the coin that they are talking about, that they are going to issue, has its own bridge to Ethereum. Okay guys, this is a working product, okay, just to let you know. Thirdly, it's integrated with DeFi industry leaders, directly integrating into other DeFi protocols such as MakerDAO and Aave allows Centrifuge users to get instant liquidity and makes DeFi protocol more secure against destabilizing events by adding uncorrelated collateral. Okay, so let's look at Tinlake, right? That's the dApp that is going to be used on top of Centrifuge blockchain. So Centrifuge Tinlake is the asset-backed financing dApp, right? Tinlake allows asset originators to finance their assets and investors to invest in them, all without the trust of a middleman or relying on a single point of failure. Asset originators can make use of financial tools that are usually only reserved for big corporations, which are known as securitizations. Okay, this financial tools such as securitization, okay, what they are offering to retail investors like us was only previously reserved for big corporations. That's what they mean. The protocol coordinates the various parties required to structure, administer, and finance collateralized pools of assets categorized by type of risk, like invoices, mortgages, auto loans, or royalties. By simplifying the process and reducing costs, Tinlake's protocol creates financing flexibility for asset originators, allowing them to optimize risk allocation and access instant funding from DeFi or their traditional investors. So I just want to explain a little bit what do they really mean about this. If you have heard of invoice factoring, you'll understand that, for example, if you're a company, you're a small company supplying to a big company, you know, let's say you are supplying plastics every time, right? So let's say you've got an invoice of $100,000, but usually the companies have a term of 45 days, sometimes 60 days, sometimes 90 days also. So these guys will pay you, but they will take time, you know, that's their term and condition. So if you are supplying to big supermarkets or, you know, big shopping, big shops in some shopping centers, so they have this term, the 90-day term, 60-day term. And as a small company, you can't wait that long, but you know it's a big party and you want to do business with them because they will pay you. But the thing is that you can't wait so long because you need cash flow. You know, sometimes you might need to pay the staff, you know, and all that. So what they are doing is they are selling these invoices. So they are collateralizing these invoices and then or selling it cheaper. So invoice factoring, as I was mentioning earlier. So let's say if I'm a small company and I have $100,000 invoice, okay, from a big supermarket that's supposed to pay me, but it's only going to pay me in 3 months' time. I can sell that invoice. I can sell that invoice instead of 100,000 because I know I'm going to get the 100,000, so I sell it for 95,000, you know, or maybe 90,000, you know. So I forego that 10,000, but at least I will get that 90,000 earlier, right? So I can use it for whatever I want to use it. So this is the type of collateralization pools they are talking about. Not only invoices but mortgages, auto loans. So it's quite it's a quite wide range, and this is not generally for retail investors, but this project is allowing retail investors to get into the action. So how it works is like okay, before that, why we built Tinlake? So Tinlake is built on top of Centrifuge, right? It allows for on-chain borrowing against collateralized assets completely managed by smart contracts. Not only Tinlake enables asset originators to access the growing liquidity in the decentralized finance ecosystem, it also enables stablecoin issuers to offer a stable store of value backed by our collateralized asset pools. Ultimately, Tinlake will become a fully decentralized financing protocol that interoperates with different blockchains and plugs into a variety of funding sources, including a variety of stablecoin. So this is how it looks like. So they are depositing a collateral. So they are collateralizing whatever, you know, for example, your invoice just now, the invoices, or a building, for example, a real estate. So these guys are they are going to make an NFT that symbolizes that that asset, right? And when they withdraw, when the borrower withdraws, they will withdraw in DAI or any USDC or any stable coins. So investors invest the stable coin in this pool, and then from here it is being lent out to the borrowers. By the same time, the borrowers deposit their collateral in form of NFTs, right? So they tokenize their assets, okay, as collateral. Okay, so very quickly, Tinlake's set of smart contracts pools NFTs that represent non-fungible real-world assets and use them as collateral to finance an asset in a stable cryptocurrency such as DAI or USDC. Okay, this is done by issuing fungible interest-bearing tokens that represent a claim on a fraction of the proceeds of the entire pool. These fungible tokens can be locked in crypto protocols or transferred to investors to draw funding. When liquidity is injected into Tinlake, our risk and yield tokens, DROP and TIN, are minted accordingly. The same mechanism applies in reverse when funding is paid out and tokens are burned. Okay, so when So Tinlake can be deployed with a two-token structure that allows investors to invest in two different kinds of fungible interest-bearing tokens. Okay, TIN and DROP. Okay, both tokens represent the liquidity deposited into Tinlake and accrue interest over time. TIN, known as the risk token, takes the risk of defaults first but also receive higher returns. DROP, known as the yield token, is protected against defaults by the TIN token and receives stable but usually lower returns. So it's like kind of a balancing act. So you get there are two tokens in the pool, right? So if there's default, supposing they don't pay the invoices for whatever reasons, so TIN is the first thing to get hit. But the thing is that it has higher returns already over there. So DROP is balancing out for TIN, so it has lower returns, you know. So you just have to understand this as a balancing kind of mechanism. Okay, so the benefits for originators, okay, or those who are who are setting up the pools, you know, it's a decentralized line of credit for your assets, right? Instant money on demand, no bank, cost-effective process for collateralization, ability to unlock new assets for funding, flexible and advanced repayments, mini securitizations for lower cost of capital. And for investors is high yield, low risk, and is short term. Transparent securitizations, track and trace each asset, liquid investments into illiquid assets, continuous returns 24/7, 365 a day. It's bankless and competitive risk assessment and underwriting and access. This is very important, giving access to newly unlocked asset classes, which otherwise we don't get a chance to, right? Okay, so just to show you what Tinlake is, you can see Tinlake is already a working product, right? And you can see these are the pools, and you can actually look how much are they giving and the APY and how much is the pool value, right? Generally, it should be a healthy pool value. Okay, if you look at, let's look at this Harbor trade. Okay, Harbor. For example, look at this asset originator. Okay, so they have this is what the company does. Harbor is a fintech company focused on supply chain finance and working capital solutions to improve the cash conversion cycle. Harbor's trade finance programs accelerate supplier payments. So what I told you just now, it helps the supplier gets payment early and achieve buyer and supplier's liquidity needs. So this Tinlake pool is financing a portfolio of SCF invoices, supply chain invoices, with a typical maturity of 60 to 120 days. So this company is collecting a pool of invoices, okay, and this Tinlake pool is financing a portfolio of SCF invoices. So pay off the suppliers earlier, right, with a typical maturity of 60 to 120 days, because some companies, as I mentioned to you, cannot wait for so long, right? So if you just click on this executive summary, you can see what the company is all about. We can look at here. You can see here what are the collateral, which is trade invoices. The average collateral size is 100,000 days outstanding. I like this underlying assets historic average default rate is less than 1%, so it's low risk. The advance rate is 96%. So you can take a look at this, okay, and then you can go through the pools just now I mentioned. So you can see a different kind of pools, right? Okay, so yeah, so that's what this project is about. Now let's talk about, so the asset that we are talking about is Centrifuge token, right? CFG, and registration opens on May 6th, and registration deadline is on May 21st, 23:59. Option 1 sale round begins on May 26th and at 1700 UTC, and option 2 sale period begins on May 26th, 2300 UTC. Okay, and options 1 and 2 sale period ends on May 31st, 2021 at 1400 UTC. So your option 1, guys, okay, for this option 1, okay, tokens unlock on July 14th, 2021, and option 2 is 38 cents per token. Tokens released linearly over 2 years starting from July 14, 2021. Now, the supply is capped at, for option 1 is capped at 17 million, and option 2 is also same, 17 million. And both options have a minimum purchase of 100 and maximum purchase of 500. And you can pay in a few types of cryptos, in USDC or USDT. There's no fees. Remember, if you pay by USDC and USDT, there's no fees because they value one US dollar as its equivalent, right? And if you purchase with ETH or BTC, and then there is a transaction fee of 0.5%. So just take note of this, right? Might as well, why you want to pay that 0.5%? Just use USDT or USDC if you have. If not, then you gotta swap lah, yeah. Okay, so users will be registered for a token sale and will receive an email with a unique link to enter the queue prior to the start of sale. Yeah, but whether you get or not, we don't know, because there'll be a lot of people, but it's worth a try, right? Because this is a good project. Any Coinlist projects are good, okay, because they have done their due diligence, so you don't have to really worry. The team will be solid, and the business, the project will be generally a good project, So you can choose to register option 1 or option 2. Okay, very quickly, Centrifuge is the native token of the network, is used for staking and paying transaction fees and participating in governance. So it's a governance coin, right? And CFG provides chain security and rewards liquidity providers in Tinlake, right? So CFG supply is 425 million and grows at a rate of 3% per year inflationary, but subject to governance. But the transaction fees will be burnt at a rate set by on-chain governance, so that token supply becomes stable. So yeah, so it's good. Right, wrap CFG is bridged to Ethereum and available as a ERC20 token. Okay, this is, you can look at this and you can take a look on this on your own. I just want to show you, I just want to explain to you something in case you didn't understand. So this centrifuge technology is built on Polkadot, right? And the dApp is bridged to Ethereum. So this gives Centrifuge an edge on accessing two of the largest the biggest ecosystems in crypto. One for DeFi and one for speed. So they are smart. You know, they use DeFi. They use Ethereum for the DeFi liquidity, and for the speed part they use DOT. So I like this idea. You know, Centrifuge currently accepts DAI and CUSD in its pools, and in future can accept any stable coin such as Akala, DAI or Celo. Okay, and they are also working towards money markets on both Compound and Aave. Guys, get into this. Okay, get into this. Okay, this is a no-brainer. Get into this. Okay, put the $500 there, but whether you get it or not, I don't know. But it's a good coin to go in and try your best, right? So you take a look and then you can read on your own. Yeah. Okay. Yeah. So thank you so much, and please support this channel, guys. Please please like, subscribe and share. And guys, I love you all, and please tell me what cryptos projects should I talk about. I'm trying to bring you the best projects there are. And yep, I guess that's it. And namaste, crypto aficionados. Please support me to grow my channel. Please like, share and subscribe. Thank you.